Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 311 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today, we are going to be talking about an article that I ran across on CNBC that talks about being single and your financial life and how single people tend to be worse off financially. So I want to talk you through the ability to be financially successful even if you are single. And then I also want to talk about some of the distinct advantages and disadvantages of marriage when it comes to your finances as well, and exactly how you should handle your finances, if you have some significant other. So stick around for a discussion of all that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcast, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual watching or listening to this show on a day-to-day basis. Now, as I do, I was going through some CNBC articles trying to find some things that I think you guys would find interesting on this show. And given that most of the people that I'm talking to here and most of the people that I'm interested in teaching and helping, not that I'm not interested in teaching and helping everyone, right? But most of the people who would watch this show or listen to the show would be younger people, right? People who are trying to get their financial life in order, right? And a lot of younger people are single people, right? Or they're at least not married people. And so I think that it's really relevant to understand how single people may be getting the short end of the stick financially, or it just may be a product of our behaviors, given that we do not have some significant other. So I want to talk about exactly what it looks like for single people and why they are seen to be, quote, worse off financially than those who are not. Okay, so for decades, adults have increasingly shunned the idea of tying the knot, right? This has been the case. People are like, oh, it's just a piece of paper. It's not anything important, right? Getting married really became less and less cool, less and less the thing to do as, the 1900s came to a close. You came into the 21st century, a lot more single people out there and a lot more people out there who are just willing to do their own thing, right? Although more people are cohabitating, right, which means just living together, right? It's not been enough to offset the steady decline in marriage, leaving more people uncoupled overall, according to a new recent Pew Research Center analysis of the latest census data, right? So what you're seeing is more cohabitating, less in the way of marriages, and then overall, you have more people who are not in a couple. Okay, so you have a lot more just single people. Now, a record number of adults between ages 25 and 54 are single. As of 2019, roughly 38% of 25 to 54-year-olds were neither married nor living with a partner, up sharply from 29% in 1990. So like I said, this 21st century, being married or even cohabitating has been something that is just not occurring in the way that it once was. However, single adults are worse off financially. Okay, partnerships seem to have some benefits, right? Having somebody that you're working with and somebody that you are doing your life with and doing your financial life with, it seems to be beneficial. Whether better economic circumstances make someone more desirable as a potential mate, or because being in a relationship has a positive influence on career prospects, better labor outcomes are associated with having a partner. So let's unpack that just a little bit, right? So it says whether better economic circumstances make someone more desirable, right? Let's not act like money doesn't play a part in determining who your partner is, especially if you're somebody in your 20s, 30s, 40s, right? If you're already an adult, and you're picking your partner is likely going to have some weighting on them in your mind based on the work that they do, the amount of money that they make, or the amount of money they're going to make, right? Now, that weighting may not be extremely significant for some people, but for a lot of people, it is an extremely significant factor in determining who they want, because, people want to be financially stable, right? People want to be able to make money. They want to have money in their pockets, and they want to make sure that they can be well taken care of. This is something, this is not a knock on women, right? Because women can 100% go out and make their own money, right? But you do hear a lot of women talk about wanting a man that makes a certain amount of money, or wanting a man that has a certain type of job, right? This is just the facts, right? It's people are looking for mates that are more desirable because they make more money. They'll even take somebody who's not as good looking or maybe not as charming because that person has a good job and it provides them with some stability. Now, it says, or because being in a relationship has a positive influence on career prospects. Now, this I think is really interesting because if you're in a relationship, or you have somebody that you care about deeply and that you love, and you want to help take care of them and help take care of maybe the family that you build together, right? That's going to increase your career prospects because now you have motivation, right? You have the motivation to go out and get a good job. You have the motivation to go out and try to make good money, right? If you're just by yourself, you may get very, very comfortable with just, making X amount of money. And there's nothing to say that that's wrong, right? But it's not going to allow you to maximize your financial life in the same way as somebody who's going to go out and they're going to try to do the best for themselves and their family because they have that extra motivation. They have that extra person or people that are going to be that motivation for them, right? So both of those things are 100% true. Better labor outcomes then are 100% associated with having a partner. Now, single adults are less likely to have a bachelor's degree and less likely to be employed compared to their coupled up counterparts. Now, I don't know exactly, what direction the causation is in here, right? Are you single because you don't have a higher education, or do you not have a higher education because you're single? I would say it's hard to draw the line to say, somebody who's single is not going to have a higher education. It's a far easier line to say that if you don't have a higher education, maybe you're not seen as driven, or maybe you're not as driven, or don't have high aspirations, and maybe that makes you less desirable. I don't know, right? But that's not to say that not having a college degree doesn't make you a desirable person. I'm just saying in the minds, the psychology of individuals. This has nothing to do with what is actually true, because there are plenty hardworking people who have no college degree and make really good money and do things that are going to benefit themselves and their family and their potential spouse. Now, they say that single adults are less likely to be employed. Now, I wonder why this is. Maybe it's the lack of pressure associated with, the job market, right? Because again, if it's just you, and I've told my wife this before, if I just lived, just by myself, if it were just me and it weren't her and my son, right, I'd probably, have a mattress on a floor with a TV and a PlayStation, and that was about it, right? And just buy food and live life. I'm not going to buy just a whole bunch of stuff, right? I'm not going to have a whole bunch of stuff just in a house or in an apartment or somewhere, right? I'm going to be very minimalistic because, who cares? And I think that might be the same kind of thought process that leads single people to be less employed. Like, who cares? I'm just having to take care of myself. I'm not trying to impress anyone. So that may be what's going on there. Now, in 2019, less than 3/4 of single men were employed versus 91% of partnered men. Okay, so less than 3/4, so that's less than 75% versus 91%. So you've got at least a 16-17% spread in difference between the partnered men and the single men. And that's not even saying married men, that's saying partnered men. Okay, that's men who have some partner, who have an individual who's a significant other that they live with, right? This is a very, very stark difference, right? By comparison, single women are also less likely to have a college degree, but slightly more likely to be employed. Now, I think that's very interesting. This may be the fact that maybe men need that motivation. Men need a motivation to get up and go to work and do something to be driven. But maybe women are like, my motivation is that I'm a woman and that I'm trying to do something that most women aren't, or most women haven't done historically. So I'm trying to set a new precedent. Maybe there's some motivation there that men just don't have. Now, as a result, Single adults make less money on average than partnered adults and are more likely to live with their parents. Okay. In 2020, the number of adults moving back home temporarily spiked due to COVID-19, but has since come down. Men with a partner take home $57,000 in median earnings as of 2019, compared to $35,600 for single men. Right? So this is $21,400 difference in median earnings between the partnered men and the single men. Right? So you see there's a distinct difference. There's a distinct difference between these two groups of people. Right? These are not the congruent group of people, and one just has a partner and the other doesn't. These are different people. Now, for women, the difference is smaller but still persistent, with those in a relationship making $40,000 in median earnings versus $32,000 for singles. Now, there's no surprise that if you're single, it's going to take less money to live your life. It just is, right? You're just taking care of one person. It's cheaper to do that. Okay, but the fact that let's say you just add these people together. You take the median man and the median woman, right? This means that the median individuals in a relationship, right, are making $97,000 a year as a couple, whereas the median for the single people, if you just put them together, right, we're talking about $67,600 a year, and that's a stark difference. It's a big difference in the amount of money made. So these groups of people are just different. All right, these are definitely different groups of people, and obviously, the partnered people likely have families that they're trying to take care of far more often than the single people are. Not to say that the single people don't have this responsibility, but responsibilities create the need to make more money. I would like to see this broken down by age. I would like to see this broken down by the type of job that individuals have, or the number of children that they have, or whatever. I think that would be an interesting subsample to what they did in this research. Now, further, the gap in economic success is only growing over time. This trend has been steadily occurring over 30 years. Right? There's not any reason to believe that it has peaked either. And I'll agree that there's not any reason to believe that it has peaked. Now, the reason that it may not have peaked, though, is not necessarily because you have people that are just different in the way that they live their lives. Some people partnered and married and some aren't. That may not necessarily be the case. What may be driving that continued drift is the fact that those individuals who are married or are partnered or live with somebody, right, they're likely to keep trying to push for more and more money in their jobs, and the single people may not. Right, so there might just be this greater and greater disparity, and as wages rise, there will be a greater and greater disparity, because the same percentage increase on a higher amount versus a lower amount, the higher amount is going to have a higher dollar increase because it was a higher amount to begin with. Okay, so naturally, this is saying, okay, people who are single are worse off financially. Now, does this mean that if you're a single individual that you're just, you're disadvantaged, or that you're not being taken care of in the same way? Absolutely not. Right? If you're a single individual, you can absolutely win financially. 100% you can. And many may say that it takes away a lot of the stresses of trying to win financially, and it takes away the weight that may be added on to you by somebody else's financial misbehavior. You only have to control one individual if you're single, right? Just control you. Control what you're doing. Have good habits, create a good plan, follow the plan, right? And it's easy to do so. Now, the argument to that would be, well, with two people, it's easy to have somebody who is an accountability partner, right? Somebody who's going to hold you accountable. But let's say that person doesn't necessarily hold you accountable. Let's say that person is constantly pushing back against the ideas of living a healthy financial life. Well, that can be a problem, right? That can be a big issue that you'd have to fight against in order to build up your financial life that you wouldn't have to fight against if you were a single individual. Now, single individuals, they also have some advantages that married individuals or partnered individuals don't, right? Those individuals tend to have just more flexibility. Right? There's just flexibility to get up and move and go out and find the best job that they can have. I would also guess that a lot of this survey and this data has a lot to do with age, right? If you are looking at younger people are probably going to be single relative to older people. Okay, I'm not saying that there's not probably an increase in the number of older individuals who are single, right? But young people are more likely to be single, and you see young people who are single. Okay, well, they're early in their careers; they're likely to make less money. That's not going to be surprising. So again, that's why I would like to see the age breakdown of those single and partnered individuals. But nonetheless, right? If you are trying to win financially as a single individual, you can absolutely do so. You just have to make the most of your situation. You have to make the most of what you have going on, and you have to be disciplined. You cannot rely on somebody else. You're going to have to either find accountability in some group that is encouraging to you, or you're going to have to find accountability in a person who's encouraging to you, or you're going to have to be self-accountable, right? And keep yourself accountable to good financial habits and building a strong financial foundation over a long period of time. Because ultimately you just don't have a support system there, or a motivation there that married people or partnered individuals are going to have. They have a motivation that you don't, right? But your motivation can be that, like, hey, I don't have somebody that I am beholden to, somebody that I'm trying to do this for, but ultimately I want to get my life cleaned up so I can have somebody, and I'm not a burden on that person, right? I'm not a burden on that person when I finally meet the person that I'm going to live with, I'm going to marry, whatever, over the rest of my life. So ultimately, just because single people are worse off, meaning they make less money, doesn't mean that they're going to be worse off over a long period of time. It just means that where they are in life is not equivalent to where married people are or where partnered people are. It's just different, right? Everybody has different life circumstances. This is just truth, right? It's like saying, I'm sure there's some difference in the data between people who have kids and people who don't, right? And I'm sure that falls into this particular data set. And you could probably say, I don't know what it would find, but it might find that people who don't have kids are better or worse off financially. I don't know, right? And this would be interesting. It'd be interesting, but it's just the nature of having two different groups of people who live different sets of lives. So I don't want you to look at a headline like single people are worse off financially and go, oh, poor pitiful me, I'm single, so I'm, disadvantaged, or I'm single, so I can't win like somebody who isn't single. That's not the case. It's just you're single, so you're probably young. You're probably somebody who hasn't matured in the job that they have yet. You may not be living on your own yet. All these different types of factors that go into it that are not going to be conducive to you living the strongest financial life relative to somebody who's married and has children and has responsibilities and owns a home and is investing for their future and has been in their job for a while. Like, that's just a totally different person, right? But you can get to that point very, very quickly. You can go from being a single individual to being at that point very, very quickly. So just don't think that your singleness is what is leading you into not being as financially well off. It's not necessarily that. It's just that you're just not at the same point in life. And some people are going to remain single. Okay. And that's why I'm interested in age here, because I want to know these older individuals who remain single. Do they remain less well off financially? Now, I would guess that the less income you make, then the less ability you're going to have to build wealth over a long period of time. Okay, I would guess that that's the case. But let's just say you took a household that makes X amount of money, and you took a single individual who makes that same amount of money, right? And you said, compare those two over time. I don't know what the huge difference would be. I don't know how different these groups would be. I'm sure there'd be some differences, but again, that's just the difference in people's lives. When you just have to take care of yourself versus taking care of, a spouse or a significant other and kids and things like that, life is just different. Okay. So don't think that you're just naturally worse off. You just may not be at the point in life that other people are at, and that is okay, as long as you're taking the subsequent steps that it's going to take in order to get to a good place financially over a long period of time. Okay. Now, let's talk about for a second why marriage does make financial sense, because marriage does make financial sense. Okay. Now, marriage, it makes financial sense because, if you have a significant other who believes that getting married is more of a financial liability than a benefit, that mindset is more common than you may think. right? Many people are largely confused by the long-held belief that married couples pay more in taxes than those who are single, right? They've held to that line of thinking as a reason to avoid tying the knot. Right? That's an excuse that people use, by the way. Not only is this largely untrue for many couples, but there are several reasons why marriage makes financial sense. Okay, so let's talk about some of them. Yes, America's progressive tax system can cut both ways for couples, right? Despite various attempts at reform, a marriage penalty still exists for some couples who earn about the same amount and are pushed into a higher tax bracket when their family income more or less doubles at marriage, right? If you have two people that make $50,000 and they get pushed to where they make $100,000 when they get married, this may not be beneficial to them. Now, this holds for both high and low income couples. By contrast, couples in which one partner earns all the income or significantly more than the other sometimes benefit from a marriage bonus because the higher earner's tax bracket drops after marriage and they end up paying less in taxes than if they'd filed separately as singles. In all, marriage bonuses can amount to 21% of a couple's income, while marriage penalties can amount to as much as 12%, according to the Tax Foundation. Eliminating any marriage penalties and bonuses would require a significant rewrite of the tax code that would have far-reaching effects. Instead, lawmakers rely on marriage penalty workarounds. Okay, so there can be some benefits to the taxes if you are married, because two individuals that make the exact same amount of money getting married is not as common as somebody making more than the other. Then, Social Security benefits. When married, you may be entitled to retirement benefits from Social Security. That is 50% of your spouse's benefit. If your benefit's less than 50% of your spouse's benefit, this would apply to you. Qualifying would be dependent on whether certain requirements are met according to the Social Security Administration. This would also apply to divorcees that were married for at least 10 years and have not remarried. Ultimately, this provides more security to a spouse that earns significantly less than the primary wage earner in the household. Okay, so there can be Social Security benefits to being married. Then, what about the Tax Cuts and Jobs Act? Okay, so the advent of the Tax Cut and Jobs Act, right? This was Donald Trump's tax reform, led to several changes in the tax code that were intended to lower corporate, individual, and estate taxes. Right? There's already been much discussion about how the tax code makes only small reductions to income tax rates for most individual tax brackets while awarding significant tax deductions to corporation. But also the cuts that benefit individuals will phase out in 2025, but will remain for corporations and other entities. Right? That debate aside, there's much new information for married couples to consider, right? Such as tax brackets, right? And tax bracket phase outs. Okay. First of all, the new tax bracket for married couples filing a joint return are now double the single bracket rate at the same income, except for those in the 35 and 37% brackets. This alignment limits a primary cause of the previous marriage penalty, as more married couples filing jointly find that their combined incomes now place them in a lower bracket. So again, an advantage to being married there. Similarly, the child tax credit phase out has been aligned beginning at $400,000 for couples, which is double the $200,000 phase out for singles. Previously, the phase out was $75,000 for singles and $110,000 for couples. So this change eliminated another potential marriage penalty for couples with kids and is giving people with kids and people who are married more money. The alternative minimum tax is a tax regime that runs parallel to normal tax rules and applies to higher income individuals and couples. Under the AMT, when taxes are calculated, the higher of the two figures is what's owed by the taxpayer, much to the ire of those lucky enough to trigger it. Right, the AMT remains under the Tax Cuts and Jobs Act, but the new rule has increased both the AMT exemption and the income level at which AMT phases out. This result is that the AMT will hit fewer high-income taxpayers. Okay, the Tax Cuts and Jobs Act has a lot of benefits here, has a lot of benefits to being married. Also, if you're married and you're investing in, let's say, IRAs, right? You can, even if one spouse does not make any money, does not make any income, that spouse can still have an IRA that gets funded by the other spouse's income. If you have a married filing jointly tax return, you can put right now up to $6,000 per person per year into IRAs if you are married. So that increases the amount of tax sheltered money that you can have. What about health insurance benefits, right, of being married? This is possibly the largest financial benefit of getting married. If one person has access to a company-sponsored health insurance, they can add their spouse to the policy for an additional cost. If both have access to health insurance, they can choose the best or the cheapest plan. So you just have more options, and health insurance is extremely costly, right? So you can be better off financially in that way. When couples enter a marriage and both have company-sponsored health insurance, they have to decide whether both should keep their own insurance or whether one spouse will join the other's plan. Generally, coverage can be changed in the 60 days following the marriage. Keep in mind that couples who get their health insurance via an exchange must enroll together, although each individual can choose a different plan. Also, if each partner received a subsidy via the Affordable Care Act when single, they would likely be penalized once they're married, as their combined salaries would probably push them over the cutoff threshold. Okay, married couples also tend to get big discounts on long-term care insurance. This is because couples tend to care for each other at home for as long as possible. And long-term care insurance, it's going to be cheaper the longer they think you're going to be able to live without the care. And if you're married, you will likely live without the care longer. Then auto and home insurance benefits. By pooling insurance needs, insurance costs go down. Also, married couples are likely to get into fewer car accidents than single people. Multi-policy discounts and the lower price that comes with being married are just a few of the insurance benefits. Married couples pay approximately 4 to 10% less on premiums for car insurance. Other discounts include multi-car policies and bundling homeowners insurance with auto insurance. Some home insurers offer discounts just for being married, so be sure to ask once you're hitched, right? Then what about better loans, right? 2 incomes are better than one. If you apply for a $150,000 mortgage as a single adult, you may only have your own income for the bank to consider. As a married couple, you combine your income and you'll likely qualify for a larger loan with better terms. Just remember that income isn't the only factor. Lenders also examine credit histories, but you could put something in one spouse's name, right, that has the better credit history if the other one doesn't have as good of a credit history, right? Because everyone's credit score is attached to their social security number, getting married doesn't erase or start anew your spouse's credit history. What marriage does, however, is create a history of joint debts and new accounts for each spouse, which is also reflected in individual credit histories. When couples jointly open an account, both credit scores will be factored into the approval process. If one partner has especially poor credit, both could be out of luck with lenders when opening a joint account, as it could result in a denial or higher rates and fees. Of course, the opposite is also true. If one partner has better credit than the other, their history and habit of meeting payments on time can help the other partner's score. There's also the option of the partner with the better score opening accounts that both will use, though this may not work as well for mortgage applications when the two incomes are helpful, okay? So ultimately, what I'm saying here is that married couples, you need to work together, okay? You need to work together. It's going to be beneficial to be married, right? You can have some financial benefits to be married, obviously. Now, if you're just living with somebody, don't be taking out loans with that person, okay? Don't be putting things into both of your names, okay? Don't be doing anything. Don't have a joint bank account. Don't have any of that if you're just living together, if you're not yet married, okay? Because you're creating more hassle for yourself than it's worth, okay? You are not legally binding yet, okay? Wait until you are legally binding, or don't wait at all. Go get married. Okay, if that's what's in the cards for you, either go get married or don't live together. Okay, I know that's a taboo thing to say in the 21st century, right? But either go get married or don't live together, because if you go get married, then you can get some of these benefits, and you will work together better, right? But if you just don't live together, right, then you don't create this unnecessary friction where you're playing house. You want things to be joint. You're trying to do things together, but you don't want to commit to being married, right? I would guess that a lot of the variation that we talked about earlier between single adults and those who have partners really falls into the married couples, not just those individuals who are living together. Now, of course, there can be benefits of those individuals living together and working together and having a support system. But I would guess that the majority of the benefit is in married couples who have that sense of responsibility for one another, right? What's mine is yours, what's yours is mine. And that is just not the case when you have a roommate that you're in love with, okay? So ultimately, there's benefits to being married. There's benefits to having somebody that you work together with financially, right? Having somebody who is a good accountability partner, having somebody who has your best interest in mind is super helpful. But if you are single, you have the ability to win financially, right? And you may just not be at the portion of life yet where you're going to have somebody that you live with and that you're responsible for, and that you're going to have your money working towards their goals and your goals together, right? You might not feel the pressure of having to earn money for somebody else yet, and that's okay. Right? It's perfectly fine that that's the case. You are not going to be worse off financially over a long period of time because you can still put the same things into play that a married couple can, right? You're just going to have less people that you are going to have a responsibility towards, right? Maybe less motivation, maybe less of a drive to get there than somebody who may be married or have a significant other that they live with and that they're responsible for paying bills for and all these types of things on a regular basis, okay? So don't think that being single is just this crazy disadvantage, but just know that there are some good advantages to being married, and it can work out quite well, okay? So hopefully this helps you to understand the differences between individuals who are single, married, shacking up, whatever. And you can be more self-aware about your financial situation and know that regardless of the situation that you're in, you can win financially, but it's a choice that you have to make, right? And depending on where you're at, it may require you to step into some positions that you're not as comfortable with yet, just to get to somewhere that is financially stable for a long period of time. So hopefully this helps you do that. And hopefully if you have any questions or concern, you can leave them down below in the comments section. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, like I said, and I'll be sure to respond to anything you leave for me down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual watching or listening to this show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.